The euro and the British pound dipped slightly against the US dollar, although the dollar came under some pressure from weak data on US housing starts, building permits, and Philadelphia Federal Reserve's manufacturing index. The bearish trend remained intact. With interest rates cuts in Europe, bulls have no strength to boost the euro higher and resist growing demand for the dollar. After all, the US Federal Reserve continues to keep monetary policy tight. The British pound slipped despite the Bank of England's decision to leave interest rates unchanged at 5.25%. The currency was weighed down by the fact that 7 of 9 members of the bank's policy-setting committee voted for no change, while 2 backed a rate cut, indicating an increasing number of policymakers in favor of easing policy. Against this background, sterling has returned its one-month low and is likely to extend weakness. Today's macroeconomic calendar is full of important news releases that could have a major impact on market sentiment. It includes a batch of reports from the UK, namely retail sales, public sector borrowing, and final manufacturing and services activity figures. The Eurozone is also scheduled to release PMI data. So figures are expected to be revised, while others are forecasted to be in line with previous readings. All in all, the situation is estimated to have improved, which may well support the euro and the British pound. However, similar data from the United States is due out today. Thus, after a bullish correction in early trade on the back of upbeat Eurozone statistics, the riskier asset may come back under pressure in late trade. Now, let's move on to technical analysis. According to the 1-hour chart, the euro-dollar pair is currently heading towards the 1.0732 level. A false breakout at this mark will generate a sell signal, dragging the euro down to 1.0707. If the price breaks through this level and tests it from the bottom up, the European currency will extend losses to 1.0672 and probably 1.0642, where I recommend going long on the rebound to catch an intraday correction of 25-30 pips. Short positions at 1.0672 and 1.07 can be considered after a false breakout. If bulls regain control of the market, supported by positive Eurozone statistics, the euro may break above 0.732 and climb to 1.0759. At this level, traders are advised to go short on a false breakout. Going short and rebound will be relevant at 1.0787, expecting a 25-30 pip move. As for the British currency, traders are reluctant to open long positions after yesterday's comments from BOE officials. Therefore, going short remains the preferred trading decision. Short positions can be considered at 1.2684 and 27.12 on a false breakout, or at 1.2738 on a rebound, counting on the 25-30 pip decline. If the price breaks through 1.2655 and fixes below this level, especially with UK business activity data, a sell signal will be generated. In this case, sterling is likely to plunge to 1.2631 and even 2606. At the level of 1.2606, it would be a wise decision to go long on the rebound to catch an intraday correction of 25-30 pips. Long positions at 1.2631 can only be opened on the false breakout. Good luck and have a nice weekend.